Howdy, folks. Let's go. We're talking about Chewy right now, okay? They just reported earnings after hours. The stock is pretty choppy in trading right now, up around 1%, but in the normal trading session was up 5.8%, kind of as I think a preliminary response to potential earnings. So the stock's rising in after hours trading now. So I don't know if this is something to do with a conference call or what that might be, or just, random various spotty trading as it tends to do. So we'll take a look here at these earnings and see what they have to offer. So Chewy puts up a non-GAAP EPS line of -8 cents. Now again, this company's historically a negative earner, so nothing shocking there, but it is a beat by 5 cents. So they did beat the estimates, which is pretty good. You can't beat that. It's good to see a beat in terms of that. So from a revenue perspective, they put up $1.78 billion, which is up 44.7% year over year. Pretty nice, but the beat is not crazy. By $50 million isn't that much to write home about, but it is a beat. Again, $50 million is I'd retire, a long time ago if I had $50 million. But in terms of what this company does in business-wise, $50 million is not that crazy. So nothing too crazy, but it is a beat, and you like to see that. I expected a little bit better of a beat, personally. I thought it would be closer to the 50% range, frankly. 50% increase year over year range, in my opinion. So I was wrong on that aspect. So you know what? You can call me out on that. I'm fine with that. So overall, good stuff, though. Active customers came in at 17.78 million versus a consensus of 17.387. So good beat on that aspect of around 400,000 people. So it's good to see an increase in terms of consumers. And net sales per active customer was at 363 versus a consensus of 369. And I go over this anytime you get these type of situations with active customers and price per or net sales per active customer. The more customers you have in general, you're going to see that price or sales per active customer decline, just because more customers means you're more likely to lower that average down, and people that buy less will be considered active customers still. So your net sales per will decline regardless. That's just kind of how it goes. So that didn't hit the consensus, but it definitely equals out when you see that the active customers were up compared to what they were expected to. They also see an adjusted EBITDA margin of 0.3% versus a consensus of negative 0.5, so a good beat there too. So let's see what we have here. Total sales are up 45%, as we saw there. Gross margin was reported at 25.5% of sales versus a 24.9 consensus. And looking ahead, Chewy's expecting revenue of 1.94 to 1.96 billion for quarter 4 versus a consensus of 1.79. It's a really good beat on guidance. So you can see definitely reasons for this stock to be up right now. Really just mostly stem from a beat on all three aspects. Top line, bottom line, guidance, they beat on every aspect. So it's good to see that. That usually leads to a company going up. Now, again, the stock is still up 170% year to date. You got to consider that. So it needs a lot to keep the stock going up when you get a stock up so high on the year. They need to have really good earnings to keep that momentum going. So now we look at the press release. Look at this cute puppers on the top. Boston Terrier. He's a lovely dog. I love a Boston Terrier. I miss mine. I do. I really do miss him. It's such a cute dog, though. It is. It's such a cute dog. Net loss of 32.8 million. Speaking of losses, a net loss of 32.8 million. Includes share-based compensation expenses of 25.1 million. So again, that adds to the net loss, no doubt. Losing 30 million. It's not awful. It's good improvement for the company, no doubt. So you do need to take it with a grain of salt. It sucks if you're talking about, personal aspect. $32 million is a lot of freaking money. But in the aspect of this company, it is improvement and just another step towards profitability, which is a good thing. So they don't really provide much more in terms of this press release. So pretty boring stuff. They have a boring press release. That's just what Chewy does. What can I say? So obviously, huge focus on customer satisfaction for this company. I do want to look at the balance sheet. If they allow me to do such a thing. Now, the thing about Chewy, you gotta understand this. The thing about Chewy is they have a bad habit of not giving you the balance sheet on their stuff. So, it's a bad thing. So sometimes you gotta go and do whatever you gotta do. Let's take a look, see if we can find on the non-GAAP reconciliation. Maybe, if we're lucky, if it loads. If it doesn't load, then you know what? That makes me kind of upset. But it's gonna freaking load all day, and it doesn't have it for me. You gotta be kidding me. That is definitely no bueno. Now we'll look at maybe it's in the shareholder letter. Maybe. I'm sorry. Please be. I don't want to be this way. I don't. Oh, let's go. We found it, baby. You can't hide it from me. I'm always into it. This video is the most prepared video of my life, okay? They're giving me it's a strange one, right? Strange. We'll take 9 months, though. 9-month comparison, it's not the end of the world. I like 9 months. It just seems weird that it's all in the same year. I don't know. It's weird, but total current assets of $1.13 billion compares to $626 billion 9 months ago. A lot of that is an improvement in terms of cash and cash equivalents, as well as inventories. They've risen inventories quite a bit. Pretty crazy. Total assets in general sits at 1.6 compares to 932. Most of that's just due to really the increase in total current assets is where you see a majority of that, but it is a good improvement in terms of assets. Now, total current liabilities sitting at 1.3 compares to 1.1 billion. Definitely, they rose assets more than they did liabilities, and you see that too with the total liability number of 1.7 compared to 1.3. So it is good to see. It's good to see improvement. So stockholder deficit, because they do have a deficit, it's actually increased. The deficit has shrank. I guess you could say it that way. So they're sitting at a negative 56, really just a $56 million stockholder deficit right now. That compared to a $403 million deficit earlier this year, 9 months earlier this year. So the balance sheet is growing and it is improving. So they're probably by next month turn this into an even number, or probably a positive stockholder equity, actually, which would be pretty exciting if you're a Chewy shareholder. Now, again, for me, I just don't like the balance sheet. I don't think it's a beautiful balance sheet, especially for a stock trading pretty high. I mean, 32 billion market cap on a company, making annualized revenue right around 7 billion. It's somewhat expensive. It's not crazy expensive, all things considered. So it's not ridiculously expensive. Let's be fair. But I would like to see the balance sheet a little bit better at those type of valuations. So not a stock I'm into buying. I just think the run-up's been a little too crazy. I mean, you look even over the past 5 years. Really, it only IPO'd in June of last year. There wasn't much movement, and then really this year, after March, is when it started taking freaking off, up 200% since the lows in March. After its first year, first really half a year, not doing much at all. So I just think this thing's taken off a little much, and I think there's definitely some downside risk that I personally don't want to get involved with. I think there's a lot better opportunities out there in the market, but I do like this company a lot long term because I think they're going to be obviously the foothold for pet supply delivery. Now, if others get into the game, you're talking about Amazon, Walmart. If they start advertising more of this, Chewy could lose business. There's no doubt about it. So keep an eye on that. But yeah, overall, pretty exciting stuff. Hope you had a great time and enjoyed this one.